Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have JJ Kinahan. He's the chief market strategist over at TD Ameritrade with retail trading trends in February. And of course, we're going to talk about the coronavirus impact on retail investors. It's great to have you with me, as always, JJ.
Always a pleasure to be with you, Jill.
IMX, not too much of a surprise, declining just over 9%.
Yeah, biggest decline we've seen since June of 2018. What's interesting about it, Jill, is actually some of our clients started to lever down. If you think about it, it was the last week of February, as evidenced by the jobs report last Friday, where it really started to come out. But our clients had started to lever down a little bit by that. They really started to go toward fixed income, at the second half of the month overall. So I found that a little bit interesting.
Yeah, but even buys, they were going to, the regular go-tos, Microsoft, Apple, Disney.
Well, as it turned out, that seems to be a pretty fortuitous place to be. Companies that are well managed, have lots of cash on hand, pay dividends. In this interest rate environment, dividends are starting to look a lot more attractive, aren't they? Very interesting overall that's where they chose to go. Microsoft, as you know from you and I talking so regularly, has been a favorite of our clients. Kind of interesting, Apple last year, people had tariff concerns, so weren't afraid to sell Apple at times. Interesting now in times of crisis, they want to be with Apple because Apple is so cash rich.
Yeah, and we saw a couple sells. Amazon, Netflix, no surprise. February 19th, we were all-time highs.
Well, exactly. When one of the two hitting a 52-week high, the other one hitting all-time highs. Not a surprise to see those, along with Square and Twitter. And I think Square and Twitter, obviously, there has been some, Mr. Dorsey as the CEO is under some heat right now. And so overall, I think people perhaps a little bit more afraid of those two.
All right, let's take a look at millennial buy and sells. And these are always interesting. Follow them. They were actually buying Penn National Gaming, a couple of semiconductor stocks as well.
Well, Barstool Sports is something that, if you're not familiar with it, they're pretty creative.
We had them for the closing bell.
Yeah, they're really interesting, and I think that is one of the more popular millennial sites. And so I think that them buying Barstool Sports really put a lot of attraction to Penn Gaming overall, and we saw that absolutely reflected by our millennial clients coming out and buying them. And you and I have talked about this before. Companies you're familiar with that you think may do great in the long term, this is the exact case for it right there.
Which is interesting because they're selling Activision, Blizzard, and you would think with all the gaming and
Right, but perhaps a slowdown in the interest in gaming or other ways of maybe it being delivered over time also. And so, Activision's had a nice run recently also, so that's part of the reason I think too.
All right, now market outlook. It's certainly, here we are, it's Monday, March 9th. We haven't seen a stock halt in a long time.
No, it's interesting. I think many people are going to take what Marriott did on earnings. I thought was interesting this year, and it's something I think you have to. They said, here are our earnings without coronavirus, or our projections without coronavirus. Why? Because we're not sure what this actually means overall. You're going to have to interpret as you see fit, and I think that's where a lot of people are at right now. I'm not a medical professional, and I think a lot of analysts are posing as medical professionals recently. And so what I would say is, we'll see what happens. Hopefully, from what I understand, warm weather will help to stagnate coronavirus. Now, if you're bullish, what you would say is warm weather stagnating coronavirus, rate cuts usually take 4 to 6 months, so maybe in August, this could be an unbelievable thing. The realistic person, in many ways, it's like, okay, Q1 earnings, I think we all know are going to be terrible. Q2 earnings are probably most likely going to be affected. Earnings drive the market. It's very difficult to see how this could be a great year overall because of those two factors. That said, also, what's going on in the market? Why are we selling off so much? Every stock is being repriced right now, all at the same time. You don't normally see that. You see sectors being repriced, but now you're seeing the entire market be repriced, and unfortunately, it's all happened in a few days. With starting with last night being, it's hopefully maybe a washout overall.
Yeah, and it could offer some good opportunities because we really are where we were a year ago. Because at the end of the year, when we're talking December 2019. We were kind of flat to where we were in 2018, so that repricing could be great longer term because Q1's not going to be good, as you said. Q2 is not going to be good next year. So when you for this year, when you comp though next year and things are hopefully back to normal, this could be a great opportunity for longer term investors. And as you had mentioned before, companies that do have a good cash position, well managed, paying a healthy dividend. It'll shake out the outliers.
I couldn't agree more with you, Jill. I think you're bringing up great points overall. And that's what, often in these situations, people are like, oh my God, I have to get out, blah, blah, blah. And I think, again, the biggest way to think is how professionals think. And they say don't have a emotion. It's very hard not to have emotion about money, so I understand that from people. What I would say is think in smaller terms on your overall position. That is, if you're so nervous, maybe sell 5% or 10% if you have to sell something. If you're going to buy something, buy a small amount. If we go down further, it's still another opportunity for you to buy more. You don't have to, you don't have to be the first one to the party in terms of buying right now.
Yes, and trying to capture the
Yeah,
top
don't catch
or
the
the
falling
bottom.
knife.
Even Friday, we had that sell-off. Oh, perhaps this might be a good time because oil's been beaten down so much. Well, look what happened over the weekend, right?
Yeah.
Or even with yields, maybe it's time to start selling bonds. That did not work out well today. So you don't have to get the exact bottom because you have plenty of room to move back to the top.
Yeah, and if you bought some oil stock on Friday, good for you. Hopefully, though, you didn't buy all you had to buy because today is going to offer you another new opportunity. And many of those stocks, to your point, are well capitalized, have tons of cash. They'll be okay in the long run, but right now they're doing the Muhammad Ali rope-a-dope and just kind of staying there and taking some punches.
Yeah, but if you're in the 40 to 50 age group or millennials or even Gen Z, this could be an opportunity for your generation in terms of investing.
Understand your time frame on any investment you have, and when you understand that, this may be in the type of person you are. If you're a trader, it's a great time because it's volatility. If you're a longer-term investor, is this a 1-year, 2-year, 5-year, 10-year investment? If it's something that's 5 years or more where you're thinking on this investment, this is a blip on your radar.
All right, JJ, great to see you as always. Thanks for joining us
having
at
me,
Market
Jill.
Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.